Meta just reported, and the opposite of Tesla, they beat on earnings, they beat on revenue, and look at the stock. It is down 9%. At one point, it was 10%. They declared $4.71 earnings per share versus an estimate of $4.36 and revenue of $36.46 billion, beating $36.22 billion. Guys, if you're new to this channel, this is our Everything Money 24/7 channel. It's different than our other one, our main channel, because this one is dedicated towards earnings releases, immediate news, Fed, economy, all that stuff. So make sure you subscribe if you're interested in hearing more up-to-date news as it happens. This is a great channel for us. It's growing like crazy, so make sure you subscribe above. Guys, Meta is a great company. If you remember, on 11/4 of 2022, it hit a low of $88. Incredible. People said it was dead. Zuckerberg was an idiot. Now people are saying Zuckerberg's a genius. It's not dead. So let's go break down the press release to see some of the things that Meta had declared. Okay. So 3 months ended March 31st, 2023 versus 2024. $36.5 billion versus $28.6, a 27% increase in revenue. Guys, for a $1 trillion plus company, 27% increase in revenue. This is the company everybody said was absolutely dead. Gets even better. Income from operations, $13.8 billion versus $7.2, a 91% increase. Guys, I'm here to talk about process. I'm here to teach about process and emotion. Those are my two main things, and I failed on Meta. I had bought Meta from 250 all the way down. On the last day, on 11/4 of 22, I was lucky enough to get shares at $88. The stock skyrocketed to $195. I said, you know what? I love the stock. It's still worth $195, but it's gone up way too fast. So I'm going to sell it and wait for the pullback. This was a mistake for two reasons. One, I had no process for selling. Two, it broke a cardinal rule. The stock was well below its intrinsic value to me. Why the F did I sell it? Don't make that same mistake I made. Buy great companies, own them for the long haul. I made an emotional decision and I paid for it. Every single mistake I've made in the last 5-6 years has been an emotional mistake. Learn that from me, because we buy based on fundamentals, but we hold and compound based on keeping our emotions in check. That is the key to what I'm trying to teach. I'm trying to teach that process for buying using fundamentals. But guys, this company I failed on. Look at this, 91% income from operations. That's incredible. Wow, net income up 117% from $5.7 billion to $12.369, and EPS up 114%. That is incredible. Now, some of the other aspects here. Family daily active people. Daily active people was 3.24 billion on average for March, an increase of 7% year over year. Remember, Meta has Facebook, it has Instagram, and it has WhatsApp. Guys, WhatsApp is awesome. I don't know why people in the US don't use WhatsApp. It is the best texting system. Instagram, if you care to follow me on Instagram, I'm at Paul Gabriel, Gabrail. I'm on there. Follow me if you want to. I just post pictures of my dog and my fiance and my family. Average price per ad increased 6% year over year. This is going to be a number that keeps growing, and here's why, guys. In the US, I think it's around $42 or $43 per CPM for ad, but overseas, it's so much lower. So there's a lot of growth overseas for Facebook. And they're keeping their daily active people is up 7% year over year. Revenue up, cost and expenses are up. And look at this, revenue is up 27%. Total cost and expenses only up 6%. Capital expenditures, including principal payments on finance leases, was $6.72 billion. Share repurchase. Now, I'm not going to lie, not a huge fan of the share repurchase. Remember, guys, when you buy back shares that might be higher priced, it's not a good thing. To create real value, you want to buy cheap shares. At $88 a share, Facebook should have stopped paying all of its bills. Go on, tell all the creditors, come get us, because we're going to be buying back shares. Obviously, they shouldn't do that, but you get my point here. Incredible. Cash and cash equivalents were $58.12 billion, and free cash flow was $12.5 billion. That's on pace for $50 billion for the year. Incredible. Guys, home run city by Meta. They absolutely crushed it. Let's see how the stock is doing now. 10% down, 444. On the nose, 10%. Incredible. $1 trillion company, very little debt, no debt actually. So look at the market cap here. Can I make this bigger? Should I make this bigger? So guys, market cap of 1.31 trillion, enterprise value of 1.32. Essentially, this difference is debt. There's practically no debt in the company. Incredible. 43 billion in the last year in free cash flow. Does not include this quarter of 12.5 billion. So you're going to take off. So it's probably going to be more closer to $50 billion for the year. Gross profit margin, 80%. Bottom line profit margin, 28% and increasing. I think this is one of those factors there that with such a big gross margin, guys, that means for every extra dollar that comes in, 80 cents of it is gross profit. It's profit that they can use to go pay overhead. But remember, if they got $1 billion extra in revenue tomorrow, they're probably not going to spend that much to make that happen in overhead. So that's pretty much all profit there. That's why you see such a big increase in profit in the last quarter. Because the extra 27% revenue didn't require, it only took a 6% increase in costs and expenses. Follow me on that one. They got 27% more revenue and only increased their expenses by 6%. That's about 80% gross margin. That's incredible. God, this company. Please, Lord, who I love so much, please have everybody hate Meta so it goes back to $100 per share so that I can buy more shares because I screwed up already. And I've learned my lesson, I promise you. And yeah, I'm hoping for that. But either way, that's why I'm here to teach you about the emotion, because I made an emotional decision. I made an emotional decision. I'm paying the price for it. And I love the fact that I'm paying the price for it. I love it. This is how I'm going to learn. I'm going to learn from this mistake on that regard. All right, let's check out the 8 pillars on this company. Yeah, big surprise here. All check marks, except for the 5-year PE and the 5-year price to free cash flow. I bet you if I went to a community right now and said, guys, you see Meta, they'd all be like, man, you probably feel bad for selling at 195. I'm like, yes, I do. Yes, I do. That's why I love those guys. Great return on invested capital, no dividend, thank God. Let's see what analyst estimates are. Look at these analyst estimates on earnings per share. They expect $18 per share this year, growing to $30 in the next few years. Double-digit growth every single year. Revenue growth for this dead company. Just a year and a half ago, people said it was dead. A year and a half. People said it was dead. This is the whole point. Look at this. Look at this chart. When you see yourself buying here and going down, guys, remember, if you bought here you probably felt pretty stupid, and you shouldn't have. And a lot of people had said, see, you were wrong on Meta. Just like somebody said to me today, like, Paul, you're wrong on Baba. I'm like, am I wrong on Baba? Maybe. I don't know. All I know is you feel pretty good if you bought right here at 310, 320, 330. You feel pretty good right now, right? And I think you'll see, like, it was expensive for back then. But that's the thing about companies. They can grow into their value. The analyst estimates are incredible here. Let's check out the stock analyzer tool. Let's see what was the last time I did Meta? Let's go see what I made my assumptions on Meta in our stock analyzer tool. And guys, again, I'm such a believer in this. And my view on investing has changed so much over the last 20 years, over the last 10 years, 55, even the last 3 years since I started this channel. I went from this guy, 20 years ago, I was sitting on pins and needles, like scared to death about stocks going down. And then all of a sudden something flipped in 05, 06. All of a sudden I was like, wait a second, I want stocks to go down. Isn't that the way you want to be? That's why I think everybody should want sales. We always joke and say, every value investor says, it's the only place in the world people actually want to pay more for. They get excited to pay more money for these things. The emotion of it, seeing your stock fall does hurt. But if you understand what's going to drive a stock's value, and that's the fundamentals of the business, as long as you pay a reasonable price for the company, you'll probably do well. As the fundamentals of the business get better, you will do better. The hard part to allow that compounding is to sit there and be emotionally in tune. Remember, so if you bought Meta, let's say you bought Meta 5 years ago at 150, whatever this was right here, you felt pretty good along the way, but then all of a sudden you saw it fall to 88. How are you handling that? That's the emotional part that's hard, because now you'd be making a ton of money. Would you have been able to even add more shares as it went down? The dollar cost average to a lower number? Is that possible? Of course it's possible. but it's hard. But that's why I created this channel and this community. I sat there and said, guys, we have to be able to, when we're in it, it's so hard to make the right decision. It really is. I don't care who you are. It is hard to make the right decision. There's only a few people in the world, and they're called, Warren Buffett and Charlie Munger, and Charlie Munger is now dead, that can literally sit there and go, yeah, I'm going to add to that. Now, when you've bought it at such a high, low price, I feel like I'm able to do that, but it is hard still for me, especially with this channel. So guys, if you want to handle your emotions better, and I think compound your money at a better pace and be able to add to great companies at great prices, click the link below, sign up for the community. It'll change the way in which you handle your money. I can assure you of that. You need to be able to learn the fundamentals to buy a company, but learn the emotions to be able to keep the company and compound on it. And sometimes buying on the way up is the best move. That's something that's hard to do as well, because you're so stuck on, I paid back here. How do I add at this point? That's what's hard. That's extremely, extremely difficult. But these are the things we talk about all the time. These are the things we talk about. Thousands of people in this community that discuss that. That is the key. So guys, we're going to have a wait list here soon. So make sure you go to the link, sign up. It's $7 for 7 days. Beat that wait list. That way you get your spot in the community. So back to Stock Analyzer. So guys, I did a 10-year analysis up here. Revenue growth, I did 4, 7, and 10%. Might be a little light. I don't know if it's right or wrong, but I like to be more conservative. Profit margin, 24, 28, and 32. I did the same thing for free cash flow. I could make the argument for a higher number here. Why? Because that gross margin of 80% can really drive a lot of dollars to that bottom line. So I could really see somebody saying, Paul, I think it should be higher, but I'll keep that in there. PE, what's the PE in 10 years? What multiple are you assigning to the company? I put 17, 20, and 23. Could I see somebody saying a higher number? Absolutely. In fact, I'm going to. I'm going to put 18, 21, and 24. And finally, guys, I'm doing the 9% return. This is the market return, no margin of safety. What's the company worth today based on a normal 9% return in the market? Now, for those of you who look at dividend-paying companies, this includes that dividend. But this, to me, there's no reason to buy an individual company for the market return. Don't buy a company just to get the market return. You have to buy a company. If you're going to buy an individual company, make it worth your while. Make it above average return. So hit the Analyze button. Boom. We got a low price of $225, high price of $580, a middle price of $360. So I have on my watch list at $325 because with some margin of safety, that makes sense to me. Guys, stock number 2 today, CMG, Chipotle Mexican Grill, has reported Chipotle is up 4%, hit the $3,000 mark. Remember, 60 for one, 50 for one stock split coming in 2 months. That'll send this down by 50. And it's up 4% today. They reported $13.01 earnings per share versus $11.61 expected. Revenue of $2.7 billion, beating $2.67 billion. Now, Meta's still down. It's actually down 12% now. So let's just recap here. Yesterday, Tesla reported beat on earnings and missed on earnings and earnings per share and revenue. Stock went up 10%. I think it was up 12% today. Meta just beat EPS and revenue, down 10%, down 12% now. Chipotle, finally some rationality, I guess, in terms of short term, beating on EPS and revenue and the stock going up 4%. Okay, so guys, here's some more excellent information from Chipotle's actual earnings release. The big thing I love, comparable store sales increased 7%. For those of you who don't know what that is, that's for established stores, usually 12 or 18 months. This is the big thing to look for in any retail or restaurant establishment. It's easy to grow sales by opening more locations. But if your existing locations are declining in revenue, you probably have a bad business. This shows the existing locations are getting better, probably have a pretty decent business. Now, inflation's there, so that's probably a big part of it. Operating margin was 16.3% versus 15.5%. We love seeing that go up. Restaurant level operating margin was 27.5%. Let's see, opened 47 new stores with 43 locations, including a Chipotlane. So 47 new stores in the quarter, 43 of them had a Chipotlane. I don't know how I'd feel about a Chipotlane. I've never been to one. I wonder how that is. Because I look at it going, might be harder. Because I always ask for extra white rice, like I just said. So it's like, oh, can I have a little bit more? I don't know. That's interesting to me. So anyways, guys, great quarter. The thing that makes me most excited, 7% comparable restaurant sales increase. Okay, let's go look at some more stuff. $80 billion market cap, $84.5 billion enterprise value. Guys, Chipotle is growing like crazy, over 3,000 locations. This company kills it. There have been a lot of gripes about the quality of the food and the quality. So I have a problem with the quality of the service. I love Chipotle. I get a bowl, extra white rice, no beans, fajita, chicken, mild salsa. Sometimes I get light cheese. Sometimes I get light corn. That's what I do. I put the Tabasco sauce on there. I love it. The problem I have with Chipotle is I don't know what portion size I'm getting, and definitely not ordering online. If I order online, I'm getting 4 grains of rice, maybe a piece of chicken this big, and like a little piece of tomato and 1 onion in my bowl. That's an attack. So Chipotle is still killing it, but let's go look at the 8 pillars here and see. Guys, debt, don't worry about the debt. This is a long-term debt to 5-year free cash flow. A lot of leases in here, which I understand why leases are debt, but they need this in order to do the business. It doesn't bother me. But look at this, 5-year P of 116, 5-year price of free cash flow at 112. That's a lot, guys. That's a lot. I don't know if I can get behind that. Current PE, 66. Current price of free cash flow, 66. That's a doozy. That's a doozy. Very consistent on free cash flow and net income, though. Love that. 1.22 billion versus 1.23, and 715 million versus 700 million. So very consistent there. All right. So analyst estimates. They're growing this EPS like a mug. $54 a share up to $113 a share, 20% growth every single year for the next 4 or 5 years. Revenue growth, double digit. So guys, how are they going to get their revenue growth? Same store sales going up, as well as opening new locations. When same store sales go up 4, 5, 6%, and then you add in 2, 3, 4% more stores, you can get some pretty good growth there on the overall level. I've been to Chipotle's only in 2 countries, so I need to work on that. McDonald's, I've been to 8 of them. Chipotle's got a great story. It was started by a guy, I think his last name was Ellis maybe. He wanted to open a fancy restaurant, didn't have the money. So he said, I'm going to start this concept to get the money to open a fancy restaurant. Isn't that funny? Then he sold to McDonald's to help their growth. He sold part of it to McDonald's, helped their growth, or all of it. When he had 20 stores, they blew it up. They went public in 06 or so, and McDonald's has killed it on that one. Chipotle is where I fell in love with Coke Zero. That's a little tidbit for you. I fell in love with Coke Zero at Chipotle. So guys, same as before, you got to check it out. Like this company is a company that's gone from $300 a share to 10 years ago to $3,000 a share now. But it's had its troubling times. It had the E. coli breakout. It had a lot of other things that happened. I do think the quality concern is there. Mark my words, if Chipotle stock falls hard, they will blame it on something like a quality thing. They'll start blaming it on that. When I think the quality is already questionable right now. But I still love my Chipotle. So, when was the last time I did Chipotle Mexican Grill? April 17th. Here are my growth estimates for the next 10 years. 5, 9, and 13%. I did a profit margin of 8, 10, and 12. Same with free cash flow. PE, 18, 21, and 24. And then desired return, I did the market return of 9%. So guys, again, you've got to get a better return, I think, than the market, or else just buy the market. That's my whole point. So hit the analyze button. I have a low price of $570, high price of $2,000, middle price of $1,000. Guys, for me, it's too expensive. That's the reason why you get the software yourself and you're able to do it yourself. So guys, again, subscribe to the channel, check out the link below to be able to handle your emotions and learn a better process for picking investments and holding them for a long time so you can compound. Take care.